The two key components, or the two lenses we use to view the markets, are supply and demand, as well as human emotion. Now, while institutions and professionals drive supply and demand, novice traders are driven by human emotions such as fear and greed, or even hope. In this lesson, we're going to look at two key mistakes that novices make. The first is buying after a rally in price. We have an inclination to buy because the price is visibly rising, with each candle closing higher than the previous candle. This fear of missing out, otherwise known as FOMO, causes people to just jump into the trade for fear of missing out of more money. The second key mistake novices tend to make is not looking left on the chart to see if they are buying in a supply zone. What should we be doing at supply? We should be selling. Keep in mind, zones can and will many times be stacked on top of one another. A novice trader likewise makes two key selling mistakes. They sell after a decline in price, and they sell at levels where demand exceeds supply. Again, it is not uncommon to find multiple demand zones stacked on top of one another. So before you ever place an order, you need to ask yourself, are you buying when you should be selling? And are you selling when you should be buying? Why did you choose to ultimately make the decision to buy or sell? Before you move on, review and explain why buying after a rally in price or buying at a price level where supply exceeds demand are key buying mistakes. Also, you want to review and explain why selling after a decline in price or selling at a price level where demand exceeds supply are key selling mistakes. Hope to see you in the next video.